Asia shares subdued. Dollar refreshed via US fee dangers. Sydney Asian share markets were subdued on Monday and the greenback held company after a stunning US payrolls file pushed returned against speak of recession, however also bolstered the case for extra supersized price hikes. Markets quick move to charge round a 70% danger. The Federal Reserve will carry charges by using 75 foundation factors in September, sending 2-year yields up 20 foundation factors on Friday and in addition inverting the curve. The blockbuster information solely raised the stakes for the July U.S. patron prices file due on Wednesday, which can see a mild pullback in headline growth, however in all likelihood in addition acceleration in middle inflation. Despite slow increase and an predicted slide to a 0.2% meter-per-meter July CPI benefit, the Fed will likely increase coverage rates 75 bits per second at its September assembly, stated Bruce Kassman, head of monetary research at J.P. Morgan, NYSE, JPM. The key query is whether or not it'll decide that a cloth upward push within the unemployment fee is important to obtain its goals, he warned. If that is the case, its guidance on costs will move appreciably higher, alongside a message that it will likely prove to be much less touchy to near-term increased disappointments. The hazard-haunted fairness markets with S&P 500 futures and Nasdaq futures each down 0.1%. MSCI's broadest index of Asia-Pacific stocks out of doors, Japan dipped 0.5% after 3 periods of gains. Japan's Nikkei edged up 0.3% and South Korea's Kospi went flat. Chinese blue chips eased 0.2%. EU ROSTOXX 50 futures fared higher and brought 0.5%, while FTSE futures rose 0.3%. They're changed into little obvious marketplace response to news that the U.S. Senate on Sunday surpassed a sweeping $430 billion invoice meant to combat weather exchange after a few compromises on taxation in the deal. The adjustments appearance not going to appreciably exchange the net financial impact of the law, which keeps to appearance possibly to be less than 0.1% of GDP for the next numerous years, as new spending and new taxes roughly offset, stated analysts at Goldman Sachs NYSE, GS. The exceptional dollar 2-year Treasury yields were up at 3.25%, absolutely 40 foundation points above 10-year yields. Bonds additionally got a safe haven bid because of unease over Beijing's Sabre Dam in opposition to Taiwan as China conducts 4 days of military physical activities around the island. Chinese data out over the weekend confirmed exports picked up abruptly in July with a benefit of 18%, at the same time as imports lagged with an upward push of simply 2.3%. The jobs boom combined with the bounce in yields to strengthen the US dollar, which changed into up at 106.640 towards a basket of currencies having gained 0.8% on Friday. FRX. This key statistics factor is 1 million miles from a current recession, both on an exchange of employment and a ranges of unemployment basis, stated Alan Ruskin, international head of G10 FX approach at Deutsche Bank ETR, DBKGN. Data like this could similarly any mind approximately U.S. exceptionalism and is very wonderful for the USD towards all currencies. The dollar held at 135 yen and 27 sen after jumping 1.6% on Friday, even as the euro turned into suffering at $1.0182 and not a long way from chart assist around $1.0095. The single foreign money changed into no longer helped by using news. Moody's NYSE, MCO, had reduced Italy's outlook to terrible as Prime Minister Mario Draghi's resignation shook the United States of America's political landscape. The rise inside the dollar was a setback for gold, even though it had managed to bop from the lows hit on Friday to stand at $1,773, GOL. Oil expenditures recouped early losses to eke out a few gains, having suffered the worst week due to the fact that April on concerns about stalling global demand as critical banks maintain tightening. Brent delivered 25 cents to $95.17, while U.S. crude rose 19 cents to $89.20 according to Barrel.